Today, I want you to imagine something very simple. Imagine you wake up tomorrow morning, and suddenly the value of your money is lower than it is today. You did nothing wrong. You worked hard, you saved your income, you avoided unnecessary expenses, and still your money buys less. This happens to millions of people around the world every single year. Why does this happen? Because the money system that most of us use is controlled by central authorities. Banks and governments have the power to create new money whenever they want. And when more money is created, each unit of money becomes less valuable. This process is called inflation. Inflation is the reason why the price of food, fuel, rent, education, and medical expenses keeps increasing year after year. Your salary may increase slowly, but your expenses usually rise much faster. So even though you feel you are earning more, in reality, your purchasing power is going down. This silent loss of value is one of the biggest financial problems faced by the middle class today. Now, imagine a different kind of money, a form of money that cannot be printed by any government, a form of money that is limited in supply, a form of money that works across countries, across borders, and across financial systems. That form of money is called Bitcoin. Welcome to P.F.E. for all, where we make money simple and practical for everyone. When you save money in a normal bank account, the interest you earn is often lower than the rate of inflation. This means that even though your account balance increases, the real value of your money is still going down. This is why many people work hard their entire life, yet still feel financially stressed. They are not poor because they don't earn. They struggle because the system silently reduces the value of their savings. This is the financial reality that most people never learn in school. Bitcoin is digital money, but it is very different from the money you see in your bank account. When you keep money in a bank, the bank controls it. They decide the rules. They can delay transactions, they can freeze accounts, they can limit how much you can withdraw. With Bitcoin, there is no such central authority. Bitcoin is decentralized. This means no company, no government, and no single person controls the system. It runs on a global network of computers. Only 21 million Bitcoins will ever exist. Not 22, not 50, not 100, only 21 million. This limited supply is one of the most important features of Bitcoin, because when supply is limited and demand increases, value usually increases over time. That is why many people compare Bitcoin to gold. But Bitcoin is often called digital gold because it has some advantages over physical gold. Bitcoin is easy to store. It is easy to transfer. It can be sent across the world in minutes. You don't need to carry it physically. You don't need permission from a bank. You don't need to trust a middleman. You only need the network and your digital wallet. Bitcoin is also divisible. You don't need to buy one full Bitcoin. You can buy a very small part of it. This makes it accessible even for small investors. So, in simple words, Bitcoin is scarce, global, digital money designed for the internet age. Another important point is trust. With normal money, you trust banks and governments. With Bitcoin, you trust mathematics and technology. The rules are written in code. They are transparent. Anyone can verify them. No one can secretly change the supply or the system for their own benefit. This is why many people believe Bitcoin represents a new form of financial freedom.
Now let's understand how Bitcoin actually works. Bitcoin runs on a technology called blockchain. But don't worry, you don't need to be a programmer to understand this. Let's use a simple example. Imagine a very large digital notebook. This notebook is not kept in one place. Instead, copies of this notebook are stored on thousands of computers all around the world. These computers are called nodes. Every time someone sends Bitcoin to another person, this transaction is written into this notebook. Before it is written permanently, the network checks a few important things. First, does the sender really own this Bitcoin? Second, is the same Bitcoin being spent somewhere else at the same time? Third, is the transaction valid according to the system rules? When most of the computers agree, the transaction is approved. Then it is grouped with other transactions into a block. This block is added to the chain of previous blocks. That is why the name is blockchain. This process is secured using advanced cryptography and mathematics. Because of this, once a transaction is added, it becomes extremely difficult to change or remove it. This makes Bitcoin transparent, secure, and trustworthy without the need for a central authority. Instead of trusting a bank, you trust the network. Instead of trusting people, you trust the code. And this is what makes Bitcoin revolutionary. Another important part of the system is called mining. Mining is the process by which new transactions are confirmed and added to the blockchain. Miners use powerful computers to solve mathematical problems. When they solve these problems, they help secure the network. In return, they are rewarded with new Bitcoin and transaction fees. This is also how new Bitcoins enter the system, slowly and in a controlled manner. This ensures that the supply grows gradually and remains predictable. This controlled process is very different from how normal money is printed.
Now let's clearly understand why millions of people, and even some of the world's largest companies, choose to invest in Bitcoin. The first and most common reason is protection against inflation. In many countries, the value of money slowly decreases every year because more money is printed into the system. When this happens, the purchasing power of savings goes down. Bitcoin, on the other hand, has a fixed and limited supply. This means it cannot be created endlessly like paper money. Because of this, many investors see Bitcoin as a long-term store of value. The second major reason is wealth creation over time. Bitcoin has experienced extreme price movements in the past. There have been periods of rapid growth and also periods of deep decline. But when you study its long-term history, you will notice that patient investors have generally been rewarded. This teaches us an important financial lesson. Wealth is not built quickly. Wealth is built through consistency and time. Bitcoin is not a lottery ticket. It is a long-term investment asset. The third reason is financial freedom. With Bitcoin, you can store and transfer value without complete dependence on banks or traditional financial institutions. You do not need permission to move your money. You do not face international transfer barriers in the same way. This gives individuals more control over their own finances. Another important factor is growing global adoption. Large corporations, investment funds, and financial institutions are increasingly accepting Bitcoin as a legitimate asset. This improves trust and stability in the system. However, it is important to remember that Bitcoin is not risk-free. It is an opportunity, not a guarantee. Only informed and disciplined investors benefit in the long run. Before you decide to invest in Bitcoin, it is very important to understand the risks clearly. Bitcoin is one of the most volatile financial assets in the world. This means its price can move up very quickly, and it can also move down very quickly. These price movements are influenced by news, government regulations, global economic conditions, and investor emotions. Many people enter the market when prices are rising rapidly, driven by excitement and fear of missing out. And when the market falls, the same people panic and sell at a loss. This cycle of buying high and selling low is the main reason why most investors fail. Not because Bitcoin is bad, but because emotional decision-making is dangerous. Another serious risk is lack of knowledge. Many investors buy Bitcoin without understanding how it works, how the market behaves, and how risk management is done. They depend on social media tips, rumors, and unrealistic profit expectations. This usually leads to disappointment. Now let's talk about a smart and practical strategy. If you are new to Bitcoin, start with a small amount. Never invest money that you cannot afford to lose. Think long-term. Avoid daily price watching. Focus on learning continuously. Diversify your investments. Do not put all your money into one asset. Bitcoin should be a part of your financial plan, not your entire plan. Remember, Bitcoin is not a shortcut to wealth. It is a long-term tool for financial growth. If you want to make smart money decisions, understand investing, and build wealth patiently, subscribe to P.F.E for all. Your financial education starts here.